Good morning, everybody, and thank you for joining us. As Peter has already said, this is the fourth episode of our webinar series that Colliers is hosting in partnership with the TMA. That series is Real Estate Restructuring Strategies Beyond COVID-19. My name is Nick Hammond, and I head the advisory and restructuring team at Colliers in the UK. We provide real estate restructuring, turnaround, and insolvency advice to lenders, investors, business management teams and practitioners across all UK property sectors. So that means that we have experience of a wide range of projects that involve businesses and properties of various shapes and sizes. Just to give you a flavour, some examples of recent projects that we've worked on include advising on the stabilisation and sale of a part completed and part occupied residential development in the Midlands, assisting with the receivership of a prime central London office building, valuing and selling a number of student, healthcare and leisure properties for insolvency office holders, and repositioning and disposing of several non-core assets for corporate operators and occupiers, and that's on a solvent basis throughout the UK regions. So far in this webinar series, we've examined a cross-section of market sectors, which have included retail, real estate development and hospitality. And we've discussed how businesses and their stakeholders can tackle the challenges and the opportunities created by the pandemic. Today, we're going to be revisiting the hotels and hospitality industry, as it's approximately 1 year since we did our previous webinar on that topic. It's 1 month since the relaxation of internal trading restrictions, and we were expecting to be on the cusp of a full reopening. But alas, the PM's announcement earlier this week means that we now have a further agonising 4 weeks to wait until we can legitimately stand at the bar and hopefully say goodbye to service by app. And we'll come back to that later on. So last year, our theme for the hotels and hospitality webinar was the road out of lockdown. So despite this latest and hopefully final extension of trading restrictions, today we'll be talking about life after lockdown for the hotel and hospitality sector. To do that, I'm joined by a panel of industry experts. They include my colleagues, Ben Godin, who's the head of hospitality asset management for Colliers, Julian Troop, head of our UK hotels agency team, Ross Curtin, head of our UK leisure agency team, and I'm delighted to welcome Nicholas Northam, executive vice president at Interstate Hotels and Resorts, and Peter Stevens in his capacity as senior advisor and chair of credit committee at SME Capital, as well as being the former president of TMA UK, and thanks to him for introducing this session today. I should add that we also have Mick O'Donoghue, who's a director in our rating team, on hand to deal with any business rates related questions that might come up. So unlike last year's session, if you watched it, today is more of a conversational Q&A panel discussion. So we have a series of questions, some of which have already been put to us by registrants, so thank you for those. But please keep them coming. You will see in your Zoom window a Q&A function, should be along the bottom of your Zoom window. So please keep piling the questions in, and we will get to those as we go through the session. So, Chanel, if we can switch to the gallery view now, please. We'll let the audience see our esteemed panelists. And to get things underway, I'd like to start on a positive note. And whilst last year, the industry did have to close pretty much overnight, and it's been in and out of hibernation since that time, we also discussed that hoteliers and leisure operators are often innovative and entrepreneurial business people. So Ben, I'm going to come to you first, if I may. You talked last year about the importance of hotels managing their costs and preparing for a phased reopening. So what have the management teams that you work with been doing during the last 12 months? And what position are they in now as they prepare to finally reopen properly?
Thanks, Nick. Morning, everybody. So, well, who would have thought, that a year ago we would have contemplated still being pretty much in a lockdown situation as an industry, during the summer of 2021. But here we are, unbelievable period that we've all been through. I think, listen, a year ago, we spoke about the need to reduce the cost base at a hotel operating level, to minimize the cash burn, to sit on resources and ensure that we really had a period of hibernation that was as efficient as we could possibly make it. So everything that an operator or a hotel owner could do, from using the full support mechanisms that the government introduced, to on a local level renegotiating contracts with suppliers, etc., was being done. And we saw really a recalibration across all hotel types in the industry on that cost base coming all the way down. We've been through this period of stop-start with partial unlockings, some reopenings, and that's been challenging. We've had situations where we've been able to reopen hotels and then reclose hotels. That's been pretty unhelpful because you suddenly re-engage a higher cost base than you originally had, and all only to have to shut it down, a few weeks later. Hopefully, with the government announcement that there is nevertheless this delay of 4 weeks, hopefully this July window now is the definitive full reopening date at full capacity for the hotels out there across the UK. So most hotels today are open, but most hotels clearly are managing their cost base and their expenses base in a very different way than they would have done a couple of years ago. Today, it's all about really understanding where the revenues are in your individual hotel, where you anticipate the revenues to be in a month, 2 months, 3 months, and we see a very different picture around the country across different types of hotels, different geographies, and we'll talk about that a little bit later. And still this sort of, I guess, impending concern that the industry has of the tapering away of some government support measures. So we've got a slightly further delay through to mid-July to ramp up to full capacity. That is really critical to allow these hotels and other operations to reach that break-even profit point, and beyond that, get into making some money. So hopefully that's a little bit of an outline, Nick, of what we're seeing today and what we're still wrestling with.
Yeah, useful, Ben. Thank you. And let's just build on that a little bit, if I can, in terms of the revenue and the profit. Again, I'm just going to revisit something that was said at our session last year, which I think was in May, June last year. At that time, I think you expected, or you didn't expect, hotel revenues to be returning to their 2019 levels, perhaps until 2022, and that profitability would lag by a further 18 to 24 months. So are we now realistically looking at 24, 25 before many hotels become profitable again?
Well, I mean, yeah, good question. What I'd say is we're seeing today, and I'm sure some of my panelists can elaborate a little bit on this, some strong revenues in certain locations and certain hotel types. That's good. Conversely, we're also seeing some hotel revenues that are very subdued. Typically, London is a good example, some other city centres. So the recovery profile in terms of revenue has been delayed, no doubt about that. But actually, in some instances, it's accelerating a little bit quicker than we anticipated. Good news, the more people stay at home and holiday at home, that helps us a lot. In other locations, London, good example, with this continued challenge around international travel, we're seeing that being delayed a little bit further. In terms of the dates, I think I hold true in terms of revenues probably not returning perhaps before 22, 23 to 19 levels, and profitability probably coming in maybe a year beyond that, again returning to 2019 levels, so 23, 24 for some businesses, maybe into 25 for some others. So I think that's my general take. Not too much movement on that overall return to revenue or return to profitability, albeit there's this pause and these further delays that are challenging us.
Okay, thanks, Ben. Nicholas, thank you for joining us today. I haven't introduced Interstate as such, but for our audience's benefit, it is, of course, the leading independent multinational hotel operator. And there's a question here from one of our guests, Andrew Rudge, in the BDO business restructuring team. So thank you, Andrew, for the question, for joining us. What do you believe are the key changes that hotels and hospitality businesses need to make to survive?
Yeah, thanks, Nick, and morning, everybody. Great to join you. Yeah, I think it's a really good question. I think one of the quotes I've read recently is that change has always been happening in the hotel industry, and one of the things that this period of 14 months of the pandemic has done has accelerated a lot of those changes that were already happening, and they've just happened more swiftly. So I think in terms of what hoteliers need to do and what hotels need to do moving forward, I think the speed and agility that hotels have shown over the last 14 months, I think that's going to need to continue. I think we are going to have to be able to react very quickly to whatever changes get thrown at us. And they will, I don't think there's any doubt, they will continue to come at us in one shape, form or other. I don't think we can say, great, 19th of July, done, dusted, everything's now back to normal. I think there will be changes. So I think hoteliers and hotels' ability to be agile is going to be absolutely critical. Great sales and marketing has always been, one of the foundations of any successful hotel. But I think hotels really embracing e-commerce, digital marketing, more and more important. The world has been accelerated. This panel is a superb example. We're all over the country on Zoom, sitting as I am in the shed at the end of my back garden or wherever people are. And I think that ability to embrace the digital way of working, I think is going to be critical. World-class revenue management has always been critical, will continue to be even more critical. Ben talked about the sort of the different areas and the spikes and the troughs. I think world-class revenue management to be able to manage that. I think talent is very high in the press, and labor resourcing is very high. But I think the ability to recruit, retain, train talent is going to be absolutely critical. And I think those businesses that don't manage to do that will really struggle. And with that goes great service. The consumer has a huge choice now. Revenue occupancies are much lower. How are you going to stand out as a hotel? And by giving great service. And again, I think picking up on the point that Ben made in terms of costs, I think world-class procurement, the ability to procure, is going to be critical. We'll talk about supply chain later on, and really controlling those costs. And I think making sure that where you have a branded hotel, really driving the brand to deliver to your property. So I think there's a whole range of different things that the hotels will need to embrace going forward.
Okay, that's really interesting. Thank you. One of the things that Ben alluded to just now is that there are different sectors, different parts of the economy reopening at different paces. Obviously, we're all aware that some city centres are still slowly coming back to life. London, perhaps feeling a slightly different, some challenges than some of the regional cities. As you said, we're all over the country. I'm sitting in Birmingham, and actually, it's starting to feel reasonably lively in the city centre, which is great. So, how do you think we're seeing certain subsectors of the market perform, and are certain asset types becoming marginalised? Or indeed, are there some that are benefiting disproportionately because of what's been happening?
Yeah, absolutely. I think the most obvious one to kick off with is sort of the rural versus city centre. There's no doubt that city centre hotels have been dramatically impacted, worse than rural locations. And it's Ben calls out London. But whether it's, Birmingham is another classic example. We operate a lot of hotels in Birmingham. Birmingham has been very tough. Glasgow, Edinburgh, Manchester, Liverpool, any of the major city centres have been disproportionately affected in comparison to regional and rural UK. The oft quoted staycation, there's absolutely no doubt that this summer and generally hotels in leisure destinations, they did well in the summer of 2020. We will do well, and they will do well again in the summer of 2021. In fact, expecting a bumper summer. So I think that's the first big obvious. I think the leisure hotels versus corporate hotels, again, there's a degree of similarity between rural and city centre, but huge difference between leisure and corporate. And in fact, the business that we are now seeing coming through is almost predominantly leisure. Corporate business is still very, very soft. And I think the really key telling point is going to be in the autumn. Will that corporate business return? But again, I guess we'll come back to that in a minute. I think where you've got hotels that are meeting, specialize and are focused on meetings and events, Clearly, because of the restrictions on numbers, those hotels, again, disproportionately impacted negatively, because you just cannot hold big events. At Interstate, we operate across the UK, but also we operate a lot of hotels in Western Europe and also in Eastern Europe. And this is being mirrored right the way across all of our markets. So this isn't a UK issue. We operate a lot of hotels in Amsterdam, and actually Amsterdam makes places like London look positively booming, because obviously massive demand, reliance on international travel. And then if I go further afield to our parent, Aimbridge in the United States, again, the US is ahead of us, much bigger domestic market. But again, leisure is what's driving the demand in the US. And we're running hotels in the US now, mid 60% occupancies, but it's almost exclusively leisure.
That's really fascinating. And I'm going to bring Ross in on the leisure point, but just before I come directly to Ross, we've had a question just live from Mark Newman, which I'm going to throw in now. We're talking about city centre and business corporate hotels. He asks, are there any temporary alternative uses that perhaps those sorts of assets could be put to for say the next 12 or 24 months?
Sorry, Ben, go on.
Yeah, just one thought actually along those lines that I was going to add to Nicholas's views, that, and it touches upon the question that's just come in actually. We've also seen a higher growth in apartment type hotels, long stay offers, and the more mid-scale offers than we have at the luxury end. So there seems to be a trend potentially that as recovery happens, certainly for the city centres, these apart hotels or the budget hotels may recover occupancy more quickly than the full service luxury hotels. So so far as alternative uses are concerned, I mean, that's a great question. There's a lot of hotels out there with a lot of meeting space and ballrooms that they'd like to have alternative uses for. My particular view, and I'll pass on to Nicholas in a moment, is sometimes the cost of converting those means that the payback is so long, you're probably better off waiting for the return to the market over the next year or so to recover your revenues. Nicholas, to you.
Yeah, I mean, I think you're right, Ben. I think from that point of view, and certainly some of the things that we have either seen or done over the last 12 months or are planning on doing, I think over the last 12 months, we've had hotels that we have converted into nursing stroke care homes. So hospital demand was so great. We were approached by care homes, by hospitals. There was a requirement for beds. A hotel is essentially a hospital in many ways, with the obvious exceptions. So we operated a number of hotels like that for a long period of time. And obviously, what we're trying to do here from a third-party management perspective is provide cash flow to our owners. That's absolutely, that's our number one mission from that point of view. So that was a use that we put the hotels to. We do have quarantine hotels at the moment. We've got a big hotel at Heathrow, 650 rooms, which is a quarantine hotel. That's providing cash flow. I think a couple of the more unusual things, though, that sort of are coming in looking forward. One of the things that we have done, which has been very successful, is in fact, again, working with local councils and the judiciary, and picking up Ben's point on meetings. We've actually converted a number of hotels' meeting space into courtrooms. So the backlog in the court and the legal system is so great, they do not have the space to manage all of the requirements. So what we've actually managed to do is get contracts with the local judiciary. I'm giving away our secrets here, which is a worry, but is the judiciary who have actually taken over the whole meeting space, and it's now their courtrooms. So that is tremendous business for us. Now, that doesn't require anything structural or anything to be done. So that's one. And then another interesting thing and we've had a couple of inquiries where owners have sold hotels, and in one instance, the new owner has a proposal that they're going to enter into agreement with local government again in terms of providing sheltered housing and accommodation on a sort of a long-term basis, whilst they're getting people into full-time accommodation. Now, that wouldn't suit every hotel. There's obviously downsides with that, but it was just interesting that this owner who approached us, that was their specific business model. That was what they have created to do.
That is
just a few examples of stuff that we've seen.
Yeah, I particularly like the courtroom thing. I know I've heard certainly a few of my clients, their solicitors are advising them about that backlog. So that's interesting. Ross, I sort of alluded just then that we were going to try and bring in a leisure perspective on this. So perhaps you can build on what's just been said. Mm-hmm. We've had a question from Jack Kenyon at Cambridge and Counties Bank. So thank you, Jack, about the impact on city centre hospitality compared to suburban and out of town. So are you seeing a disparity there, and how your clients responding to that?
Our view is very much mirroring that of the hotels. City centres have been severely impacted. The impact of people working from home has meant much less people coming in. We've actually seen many of our occupier clients, in many cases, have chosen to leave their venues closed. Because obviously the higher with the fixed overheads of some of these prime locations, it's actually more cost effective for them to leave them closed than it is to trade. If you were to turn it on its head, we've seen that the suburban venues are very much in growth, and I think the rise of localism is one of the successes, if you could say that, which has come out of this, in that we're seeing good, strong demand from consumer and from businesses for suburban and regional pubs, bars and restaurants. In London, it's really quite a strange position in that you enter the city, it's very, very sleepy. If I went there this afternoon, it would probably feel like I've gone on a Saturday. Lots of venues closed, not many people there. But then last week I had a meeting with a bar operator who has venues in Waterloo, who tells me they are trading 150% of pre-COVID sales figures with reduced capacity. Now, their take on it is that they sit right next to Waterloo Station, and they're seeing people come in on the train, and then they're getting off the train and walking to their venue, and feel that people don't want to make that extra 15-20 minute journey into the sort of the core CBD, and would rather go to a more of a suburban fringe of city location for an evening experience.
Okay, that's interesting. So there are clearly there's some sort of winners and losers out of this, and I guess that's going to continue to change as we all start to get back to life as we knew it. So I'm conscious of time, so I want to just move this on, try and keep the vibe positive if we can. And Chanel, we should have a question for our audience now, a bit of audience participation, please, if we may. We want to ask you about UK staycations and how many of you have had, are booked or plan a domestic holiday this year. If you could just answer yes or no. We'll give you a couple of seconds to do that. And while you answer that, I'm then going to start to bring Julian Troop in from a hotels agency perspective. I'm sure Ben and Nicholas might have something to add to this about the UK staycation market. But before we do that, can we get the results of that poll question, Chanel? Wow, look at that. So 80%, just shy of 80% have had, are booked or plan a domestic holiday, and 20% do not. I suppose we could have put that the other way around. Who plans to go overseas if it had been a polar opposite? That's really interesting. So Julian, on the UK staycations piece, your team, and obviously Ben has contributed to this, recently published the report on the UK staycation market. So are we currently in a period of opportunity for those UK hoteliers, and how long do you expect that to last for?
Yeah, we've certainly seen the client base that we've got with staycation hotels. They've never been busier. I think the period of from July to September last year proved that it was going to happen, but it really is flying. Trade in the likes of the Lake District, Cotswolds, down in the southwest. I think that they'll have record years this year. I still think it will be a strong year next year, but perhaps not as strong as this year. Depends really on people's ability to travel abroad. People do want to travel abroad, but the good news is some of the things that we've been hearing is that people are staying in an area that they've never stayed in before. And hopefully what will happen is that, you know, this will be something for the future. It is introducing a different type of clientele into some of the quieter staycation locations, who sometimes would prefer to be on the beaches of Ibiza and sometimes don't understand how to behave themselves properly. But all in all, you know, trade is very, very strong indeed. And it's a great opportunity for people in the UK to show off what they've got. And certainly I think that some of the questions that were being asked before about how you get through this whole thing, just become the best in class and focus on the fundamentals of what you're doing. And if you do that, you're in a far better position to see it through. And you know, it isn't all bad news. I think it's very, very challenging. I think the world's more polarized now than ever before, but town, city and airport hotels are going to find it very difficult. But staycation hotels, they are making a lot of money. There's a huge amount of profit out there. So opportunity wise, you know, what we're now doing, in years gone by, we've always sold on actual sales performance, on trading figures from years gone by. We're seeing evidence now of people being prepared to buy, knowing what's around the corner, which is unusual, but it's happening. And you know, it's keeping us busy, very busy. And we're in a far better position, I think, than we were 12 months ago. We're
going to come to the valuation question in a moment, and we've had a question about that from Andrew Pepper. We've obviously just had the G7. Do you think that we can expect to see the traditional European stag and hen do's come to Cornwall now? I think it was actually Peter that put that question to us prior to this.
I think that there probably are examples of that happening now. I still think, though, that people will prefer to go where they've gone in the past when they're able to do that. So it's needs must, really. But whether or not it's going to be in Cornwall, I don't know. I'm quite convinced that we're back in Manchester, Liverpool, Birmingham, where all these cities have really benefited and become 7-day businesses. If you went back years gone by, they were a kind of a Tuesday to Thursday business. But what has now happened, or what has been happening, is what you've just described, have been going into cities, and they've made a huge difference in terms of the level of business, you know, throughout the UK.
Ben, I think you were going to come in on that.
Yeah, thank you. Just a thought, taking what Julian said a little bit further, that investors are looking at future years' earnings. One of the things we've seen, probably the same for you, Nicholas, but where hotels, we naturally assume a hotel is predominantly accommodation, you know, selling rooms, which of course it is, but actually in many hotels, and particularly leisure hotels, if you've got a food and beverage component, which is strong enough, compelling enough, if you've got a spa leisure component, which is also strong enough, compelling enough, then those revenue streams are actually accelerating the recovery for those hotels. So my point is, hotels with multiple revenue streams in these leisure locations, or indeed city locations, where they can fully exploit them, to Nick's point on sales and marketing, will recover from a revenue perspective quicker than others that just have perhaps one singular revenue point.
Yeah, I would agree with that. And I think just going back, Julian, this point about the city centres, I think one of the things that we are seeing is a return to business in the city centres at weekends. And I think that if you look at the week has been inverted, basically. So Birmingham as an example, Monday, Tuesday, Wednesday, Thursday, Birmingham is very, very quiet. Friday, Saturday, it's absolutely booming. So that there has been a complete reverse. And I think, again, to pick up on Ben's point, where you've got the facilities, where you've got the offering, but equally in the city centres, which have been so badly hit, they are, you know, the consumer, the customer is coming back. I am desperate to get out of my house. I want to go and do something somewhere, somehow, with my friends and colleagues and mates and all the rest of it. So I think that drive will really stimulate the city centre demand at the weekend. I think the midweek is a very, very different story for that particular segment of the business.
And I think the other thing, there'll be an age differential. I think the younger people are going to cities, and I think the older people are going as far away from chimney pots as possible. So and that's what has been driving the staycation business in the very popular areas.
We've touched on valuation, and I want to just cover off a couple of questions that we've had come in on that. And again, just Julian, I'm going to refer back to last year. You seemed reasonably positive that the outlook was generally robust and resilient for these businesses. So I'd be interested in your view on what has actually been happening in the transactional market, but also if you can just give us a bit of a flavour, and obviously Ben, Nicholas, happy for you guys to come in on this, how the valuation theme is looking for hotels. And Andrew Pepper, thank you Andrew for this, has asked, has the valuation process changed or is it the same with the numbers just lower? And we've also had a question from Colin Hearsom at Slough Borough Council asking about turnover rents, which is an interesting one. And do you think they might become the new norm for the industry? So I know there's a few questions there, but just be interested in your take on that.
If you go back a year, there was a huge amount of uncertainty. Clearly, no one really knew what was going to happen. And on a bit of a marketing bit here, we would normally sell 80 to 100 hotels in a year. We sold 47 hotels last year, which I thought was quite a good performance. Some of that's rolled over to this year, but already we are up to 24 hotels that we sold to the end of May. Some of that has rolled over from last year, but we're in quite a strong position at the moment. There's still a good deal of demand. I think one of the things that, touching on the valuation point, and it's a question that's regularly put to me and colleagues of mine in our valuation team. I'm just letting you know that I'm an agent, they're valuers, but values have held up, and the reason being is I think there's been a shortage of supply. So if you look at supply and demand, there is still quite a considerable demand out there, and because there hasn't been a huge amount of quality stock, we are certainly seeing examples of pre-COVID prices being paid, certainly in the stronger areas. In the weaker areas, I think it's wrong to use a broad brush approach to where percentages have dropped. I would say overall it's probably around about 10 to 20% in value. But I think it's really dangerous though to suddenly just say, right, fine, that is it, it's 10 to 20%. You have to judge every single hotel on its individual merits, and that's never going to change. So in terms of where we're at, I think it's very different to where people thought we would be 12 months ago, and I think everyone thought that values would have collapsed. They haven't. These support programs have held things up. It'll be interesting to see what happens in Q4 of this year to see where people are up to. But at the moment, I think it's a reasonably positive position that we've been in. Just quickly, the final one was that turnover rent. I think that it has appeared in terms of retail and things like that, but that is mainly because there's been a fundamental difference to what's going to happen with retail moving forwards. That whole industry is going to change beyond belief. Hotels will get back to being exactly what they were. Hotels, people will stay in hotels, people will visit hotels. I do think that it would be sensible to look carefully at a turnover rent. And to give you an example, I'm advising a client at the moment who's selling a hotel. It's for repurposing purposes, and the buyer has been told that we will not sell it subject to planning. But what we would do is do a sale and lease back. And certainly my advice to the client is to make sure that the rent that's paid on that lease is linked to turnover. And I think that that's pretty obvious why, because business will be affected if the planning news gets out. But irrespective of that, it is something that I'm sure will be looked at as we start to move forward.
Ross, turnover rents are quite common in the leisure industry, aren't they?
Yeah, so if you take, turnover rents are not new for like a branded restaurant in a shopping centre. They would have typically had a minimum rent guarantee with a turnover element applicable as well. What we're seeing is this model's been more adopted. Operators are looking to reduce their fixed costs going forward, but they're prepared to share the upside. What some of them are trying to do is try and put caps on that, which a savvy landlord is rejecting. And I think depending on how strong the pitch is, they're able to fully negotiate that out. But yeah, it's nothing new. There's various different models put forward. Some are exclusively turnover, some are based in turnover, some have thresholds in there, and it has a percentage increase, increases with the ratchet. We think this will become more common. Interestingly, when you get into the really, really prime locations, actually operators hate it. They don't want it because they realise that they're going to be sharing too much of their profit with the landlord, and they're saying, no, we want a fixed rent here. So yeah, they want their cake and they eat it. For a lot of sites, they want the turnover, but when it's really, really prime, they'll resist it.
Yeah, that's interesting, because a lot of the talk at the moment, of course, retail focus perhaps, but it applies more broadly as about being, partners, having that joint sort of equity. But that's an interesting view that you don't always want that to be the case, do you? We've had a question from Lionel Benjamin. I don't know if this is building on the turnover piece or precisely what this refers to, but the question is, what is the Colliers' view on the future of the hybrid lease? I don't know, do you know what that might be relating to in particular, Ross, the hybrid lease? Not sure if I'm missing something there. Sorry, Lionel, if I'm not.
No, Nick, I think what Lionel means, and good to see you on the call, Lionel, just a couple of thoughts. I mean, typically, yes, you've got the traditional lease, certainly when it comes to hotels, fixed amounts, maybe RPI'd, etc. At the other end of the scale, in our world of hotels, more recently, you've got the management agreements where you hire a management company for a fee, but actually you're participating there in the profit share. And then obviously the hybrid lease is linking that more traditional fixed rent lease to an element of turnover. And certainly we've got evidence from our client base of people who are considering leases, very much considering a hybrid lease rather than a more traditional lease as it would have been based off a fixed rent. So that's my view on that. And then just very quickly on the investment side, just to support a little bit of what Julian was saying, we're seeing a lot of interest into UK broader hospitality, certainly hotels, to make these investments. Okay, so whether it's domestic investors or overseas investors looking to put their money into the UK, there's continuing to be a very, very strong demand, which has got to be good news for the sector in the more medium long term.
And that's the same at pubs and bars. There's a number of private equity firms who've actually gone into the sector. Yes, they've picked things up cheap, but there's others circulating. And we've also had a number of IPOs. So you're seeing stock market money being keen to invest in the sector. Okay.
Well, thanks both for that, Lionel. Hopefully that answers your question. Apologies that I wasn't sure precisely what the subject was initially. I'm conscious of the time, so I want to move the conversation on to the knotty issue of the support that the industry's had recently. And Chanel, we should have another question now for our audience, so a bit more participation, please. On the subject of government support, do you think that it has been, the measures the government has introduced have been broadly effective, not effective enough, or perhaps too effective? So give you a few seconds to answer that. And while you're doing that, Peter, I'm going to try and bring you into the conversation now as we get into the government support piece. We've had some questions about banks and the lending market, so let's try and just build that conversation. Chanel, can we see the answers to that question? Okay, so generally the majority, 66%, think broadly effective, and the remainder is roughly split. So okay, there seems to be a consensus that, thank you for that, those measures have been effective. But what about lenders? We'll come back to the government in a minute, but Peter, from a lender's perspective, what are their priorities and drivers at the moment? Because up to now, the consensus generally seems to have been pretty supportive. Do you think that's likely to continue?
Yeah, I think it depends on the nature of the lender. I mean, we've got a much more fragmented lending landscape in the UK than ever before. Lots of specialist funds and challenger banks coming along. So it's quite difficult to broad brush this. But I think if you look at the commercial banks, they are, I think, quite heavily influenced by government policy. The introduction of CBILS and bounce back loans has been where they're focused and has provided an extraordinary amount of support. I think going forward, and it's a question from Tim Wilden on, when will banks reopen their doors and provide development debt? I think it will come, but it will be slow, because if you've got a government guarantee, but there are restrictions on what you can use that money for, it's still attractive funding to provide, provided there's still demand for it. And it's still a very uncertain environment for banks. You know, if you ask a borrower for a cash flow forecast at the moment, it's incredibly difficult for the business to provide one. Although there are a lot of businesses that are ticking along. I mean, we've heard mention, you know, certain hotels doing really, really well. So if you've got a track record, there will be lenders out there willing to provide funding. I mean, funding costs have gone up. There was an article in the FT last week about both Jaguar Land Rover and Rolls-Royce having to pay 4 or 5% more for their cost of funds than they were previously. Their ratings have gone down. So, and that's going to be across the board, I think. But I think there will be opportunities. I think the need for advisors to navigate round is much more important than ever before. Yeah, because certain of the banks are just still going to be focused on CBILS for quite some time. And I suspect the government will expect banks to, in the first instance, try and recover that money themselves rather than simply sending a request to government to please pay under your guarantee. So
okay,
a challenge. And I think just generally, I'd agree that the government has been broadly supportive. Yeah, £64 billion paid out in furlough payments. That's a pretty big number. 11.5 million staff. It's unprecedented. It's going to end. So, you know, where that fits, there's a lot going on, but I think we're coming to the end of the support. There has to be an end to it.
Well, yesterday, of course, sorry, Ross. Yesterday, of course, we've got this announcement about the extension to the moratorium on commercial evictions and for another 9 months. So, I mean,
which doesn't, of course, cost the government anything.
No, sure, but it costs some of our stakeholders something quite considerably. So, do you think are lenders going to have to just fall in line and continue to hold their breath?
Yeah, they've got very little choice. You know, if you can't evict someone because they're either willfully or unable to pay, you just stick with it. And frankly, going down a fire sale route is really a good option. So, you know, that's why turnaround industry encourages people to try and look for stabilizing businesses, see them through the tough times, and as we've heard on this call, you know, reducing costs as best you can, and then weathering the storm until times are better. Will there be an increase in sort of debt for equity type swaps? Possibly, but they're quite expensive to organise. So I think patience is probably the inevitable and only option at the moment. You know, a lot of businesses that you would have expected to have gone bust by now haven't. And I think we've got another year possibly of this holding pattern.
I think Nick, that I think it'll be down to the health of each business, and I don't think that there will be a flood of admins, as Peter was saying, but I think there'll be an increase in consensual arrangements where the banks sit alongside the customer and suggest it might be a good idea to think about selling. I think that might be a route that it certainly happened last time there was a correction, and I think that will start to increase as we move forward. But if it is, you know, if you're good at what you do and you've got a very solid business, I still think the banks will be supportive. But, you know, they need to make money. They want to be around when things return fully to normality.
Yeah, sure. Okay. Well, look, conscious of time, I want to bring in the question of staffing and labour, because clearly that is a major challenge right now. We've already alluded to it in some of the earlier remarks that were made, and in the session last year we talked about how important these industries are to UK GDP and employment figures. Whereas now it seems, despite, you know, predictions of mass unemployment, that we've got this acute shortage of skilled labour. So I suppose a question for the panel generally, please, and this is from me, a number of my clients, and also there are a few of our audience members that have asked about this. So thank you to all of you. What's causing the labour shortage, and what impact is it having on the industry?
kick off, Nick, from our point of view. I think I'll start off with a bit of a frustrated rant. I think the press are doing a very, very good job about talking this into an absolute state. It really is. It's, you know, what the British press are like, and I think it's spiraling in terms of, you can't open the papers at the moment without there being, I'm having to close my restaurant at 7:30 in the evening because I can't get people to work. So I think there is a huge element to that, and I think we need to be very careful not to get caught up in the hubris of all of that. Yes, hospitality has, it's always been challenging in terms of people and recruitment of quality talent. But I have to say, I think if you recruit the right people and you really focus on retention, you will actually, you will have the team of people to see you through this. So I think that's the first thing. I think Brexit clearly has had an impact on it. I think furlough has had an impact. So where people have been on furlough and then they have managed to get themselves other jobs, whether it's working for Amazon or Tesco's or Ocado or whatever, I think that has had an impact. But interestingly, I think where we are really seeing this talent or recruitment issue is actually within the supply chain. And we are really seeing big issues, food and drink suppliers, laundry suppliers. So all of those businesses that, sort of the next step beyond the consumer, they are really, really struggling at this moment in time. And I think it was Premier Inn that did an advertisement last week. I think the headline was "Holy Sheet," and that's all about the ability to get laundry onto the beds, because I think a lot of these laundry companies laid off all of their drivers when there was no demand. They've all gone to work for, say, the Amazons of this world, and all of a sudden there's a real struggle. So I think that is an issue. Again, this is not something that's unique to the UK. We've seen the same thing in Europe, and we've seen exactly the same thing in the US. It's starting to work its way through, and we personally put a lot of effort into this at the beginning of the year, sensing it would be a problem, and have done some strong recruitment drives. But I do think so much of it actually sits in retention, and how well do you look after your people, I think, is really key to that.
Yeah, I think the other, it's not just the shortage of staff. There is a concern insofar as I read the other day that the interest from EU workers for low-paid jobs is 41% down on 2019, which is a huge concern because it's some of the basics of running a hotel, which is the hardest thing to get the people to do it. The other thing as well, chefing, getting chefs is an absolute nightmare. A client of ours told us the other day, they had a chef that was on 30 grand. He'd been touted away in a bidding war, and ended up getting £55,000. Now, if you imagine that prior to COVID coming along, for 55,000, you weren't far away from getting a Michelin-starred chef working for you. That the worry is that the level of wages is going to get very, very high. Now that's
you're not going to be recruiting stuff on minimum wage anymore in centres. It's all going to go straight up, which comes off the bottom line.
Sure, and I guess on that we have had a question about rising inflation from David McGuinness. So are we, these wage costs, labour costs, materials costs, is that a valid concern, do you think? Or again, do we think that maybe that's the press just maybe overhyping something?
I think the reality is, Nick, we're having to wrestle with cost creep, cost growth on a per unit basis. The labour costs will probably rise. Julian just spoke a little bit about that. To Nick's point, I think if you've got the ability to retain staff once you find them, that in the longer term creates value rather than constantly losing people and rehiring people. I think the increase in inflation via the supply chain, I mean, we see silly little things like perhaps smaller suppliers refusing to deliver what would have been smaller deliveries, which 2 years ago they would have delivered, and now they're saying it's no longer viable for us to do that, splitting cases of wine, little things like that. But there's a lot of small businesses out there that still rely on relatively local independent supply chain. So that's not particularly helpful. But again, it's not something which the hoteliers are unfamiliar with. You know, the shortage of labor, the potential rising cost of labor has been something we've been wrestling with for many years, actually. So it's just trying to find different ways of managing that as revenues pick up and as we head forward.
Yeah,
I think one of the things as well about the labor issue is, yes, I think that if you are an independent operator and you have your one unit, I don't know, Julian, that the kitchen that you were giving the example of, but if it's one unit, I think that is a lot more challenging for those operators, because salary, of course, is really, really important, but equally it's what else can you offer somebody when you join your organization, you join your company. What have you got to offer me? Is there career growth? Is there the ability to grow within the organization? And I think if we just stick it at that base level of it's the salary, I think we're missing an awful lot of opportunities with people in terms of, you know, career, travel, and all that kind of stuff that you're able to offer to employees. Okay.
I know we could keep that conversation running for several hours, but I am really conscious of time. So I want to bring in Mick O'Donoghue, forgive me, on the business rates issue. We've had questions about rating. Obviously, we've all been talking about it. Mick, just I think quite briefly, if you can, do you think that the government is listening to the various lobbying that's been going on about business rates, and what strategies can businesses adopt to ensure that their rates are fair and manageable?
I think in terms of the survey, the consensus was that the support has been reasonable. But in direct answering the question directly, I don't think the government are particularly listening about these issues of business rates. So one of the points is that there was the opportunity to do what's called a material change of circumstance appeal regarding the impact of COVID. And the government have there is a bill going through Parliament today that will backdate legislation to prevent those appeals going through. The other thing is, particularly in terms of rate relief, they put the 3-month relief period this year ending at the period end of June, and we've already lobbied this week to say as a minimum that should be extended to the end of July. So there are these sort of points that the government don't understand or appreciate in terms of businesses. But in terms of whether they will continue to, whether they will listen, the only thing that everybody can do is keep lobbying them, keep getting those points across. There is a bigger picture in terms of the complete review of the rating system, and there should be announcements later this autumn on that. And there's been a lot of feedback that's gone back to the government. So hopefully on the key points, they will listen to that, because there has been a consensus in terms of suggested changes.
Okay. Thanks, Mick. I'm going to bring in another audience polling question, because I'm conscious that we're running up to the buffers here. But again, just keen to get the audience view on the topic of service. Nick, you talked about tech earlier on, so we can get a few comments on that. Chanel, we should have a polling question, I think. Is table service and service by app, do we think, here to stay? Yes or no? Be interested to hear everybody's view on that. And while you're doing that, it's everybody knows in this conversation, it's one of my big grumbles. I know that tech is obviously important, but the whole service by app thing just tends to drive me up the wall, whether that's just because I'm not very good with my phone or just impatient, or a bit of both, probably. Let's see if we can get the answers to that question up on the screen, please. Is table service by app here to stay? Yes, 72%. Oh no, please don't tell me that that's the case. Nick, what are your thoughts on the whole tech piece? David Gerard at Duetto has asked about tech. How are these businesses bringing that in and differentiating themselves in a good way?
Yeah, I think the table or the ordering apps are here to stay. I don't think there's any doubt about that. And I think it's whether it's via room service or in the restaurant or in the bar or sitting outside, I don't think that there is any doubt that is here to stay. And it's in terms of how do you make your business more efficient? How do you reduce your costs? I agree with you, and there are frustrations. And I think as As time progresses, and I think as these apps get more sophisticated and as people get more used to using them, I think they will become the norm, and it will, enable you to reduce your costs. And also the consumer feel, we've done surveys on it with consumers, and they certainly feel a lot safer that they don't have somebody coming constantly to the table. They feel it is a better place for them to be. So I don't think there's any doubt that we're going to see a huge increase on that. I think so far as tech in general is concerned, the rise of the app in everything that we do will continue. I think the basics of hotel keeping in terms of tech that supports the hotel, I think will continue to grow. I think where tech will not particularly grow is where you have tech for the consumer in the hotel. So where you have over elaborate, I don't know, sound and TV systems in your bedroom, or over elaborate lighting systems, or over elaborate anything. I just don't think that works. And I think the problem is it becomes so out of date so quickly that actually you end up with a product that feels dated. And certainly I know a number of hotels that feel like that, where the product just feels dated. At the time, a year ago, it was great, but where it's consumer facing and you can't even work out how to turn the lights off, that I think is a non-starter.
Okay. Well, look, we're at the hour mark now. So I guess for any of our audience members that have got to tune out something else, I want to say thanks to you all for joining us. But I am going to keep the conversation going, if that's okay with everybody else. We've still got 170, 180 participants, and we still have other questions to get to. So unless anybody needs to dive off, maybe just another 5 minutes or so. And I'd like perhaps to turn the conversation towards some projections. So what do we all think are the projections for the recovery for the rest of this year and into 2022? Do you think it will continue to be quite fragmented? And what are your thoughts on 2022 trading budgets? Nicholas, be obviously fascinated for your views on that, and everybody else's perspective as well.
Sure. I think I think the remainder of this year, I think it's going to be a strong summer, and I think that hotels will perform well over the summer. I think the really big telling piece, as we were mentioning earlier, is going to come September, October. Does that corporate business return, and does international travel return? That is going to be the absolute key to unlocking the real growth in the sector. And I think that the big cities, the Londons, the Birminghams, the Edinburghs, the Glasgows, etc., they are so reliant on that international traveller. So I think that's going to be absolutely critical, assuming that governments around the world, and whether it's the vaccination passport or whatever, but where you no longer have to quarantine when you go into a new country. I'm just talking business travel at this moment in time. I think assuming that does get relaxed and that does happen, I think that we're going to see a strong 2022. Again, I'm working on the premise that by the end of this year, restrictions are lifted, people are able to travel, and I base that on what we have seen in terms of these spikes in demand driven by leisure. I don't think there's any reason why the drive in corporate should be any different. Ross's example of that unit by Waterloo, where you've got that spike and it's now trading more readily than it was before, I think we'll see the same. Will governments allow the big events to happen? Conferences, conventions, all of those things that have been stopped, concerts, sporting events, that huge demand for all of those things and people being able to travel. I think 2022 is actually going to be really very good. And I also think, sorry, without wishing to hog the other thing as well, is I think that the cost base in hotels has irrevocably changed. And I do not think we will go back to where we were in 2019 in terms of having that same level of cost base. So I think you're going to get that increase in revenues that we're all just desperately waiting for. But I think the manner in which we now run hotels more effectively, more efficiently, and COVID pushing us to do that, means that actually our cost base will be reduced and will not rise to the the same level. So I think it's I think the future is looking bright.
Thanks, Nick. Thanks, Nick. Do you want to add to that, guys? We've still got 150 participants on. So any other thoughts on that?
Yeah, just a couple of thoughts. I mean, broad terms, I agree with everything Nicholas has said. I think what I would say towards the operators, I guess including Nicholas and all the other hotel operators out there, is getting the accuracy of the forecast right is critical. So you've got some macro elements that we're all wrestling with, the international travel piece, yes, but on a local level, if the hotelier, the operator, the owner gets accuracy into his forecast, that's going to give certainly the lenders much more comfort. They may not like the numbers, but if the numbers in that forecast are within, let's say a 5% accuracy, at least it gives comfort that the hotelier, the operator, understands the business, the dynamics, etc. So irrespective of where the trading eventually will go, if it's in line with any one of those operator owner forecasts, that's going to give some additional confidence, in the short term. Yeah.
I think
I would agree with both Nick and Ben that the summer for bars and restaurants is going to be very, very strong. I think this has been a long time coming for a lot of people who want to get out, and equally with the good weather, they're going to be out all the time. They're going to be spending in the bars, which is going to be great. However, I think when it gets to the autumn, I think people are going to, having not really spent anything for the last 6 to 12 months, they're going to suddenly feel it. And there'll be a tapering off towards the end of the year before it stabilises in 2022.
Yeah, just following on from what Nicholas was mentioning, I still think that Q4 trading staycation trade will still be pretty good. I do. I think a lot of people just don't like being stuck in an office in a house anymore and want to get out and want to holiday. Just using the analogy of light coming back to the hotel industry, I think staycation has proved it's just like someone switching a light switch back on, it's come straight back. I do think that corporate business will be a bit more like a dimmer switch, where gradually it will just start to get turned up. How long that takes, I don't know, but it's incredibly encouraging that Nicholas is feeling so positive about 2022, which is great for the industry, great for everyone.
Yeah, absolutely. Well, I know for myself at least, just touching on something that our guest speaker Tim Rumney said last year in the session about possibly predicting the end of the buffet breakfast. I certainly hope that that's not going to be the case, because it's something I know I always enjoy in my hotel stays. I'm sure everybody agrees. Look, we've still got some of the questions that have come in. I hope that our audience members feel that we've dealt with them. Andrew Shaw has asked about what happens in September without a fundamental return to normality. We've sort of alluded to that. I hope everybody thinks that we've dealt with those questions. Airbnb has been asked about. So, we could continue this session, I'm sure, easily for another hour. But I think I am going to bring it to a close just by saying thank you to all of our speakers, in particular Nicholas and Peter, for your valuable insight. Thank you, everybody, for joining us this morning. We've still got over 100 participants with us. We hope that you found the discussion interesting. And if you do still have some questions that you want to answer, please feel free to drop us a line afterwards, and we'll be happy to have a conversation offline. So thank you, everybody, and enjoy the rest of your day.
Thank you.
Thanks.